Alright, good day folks. This is your video update from Seasonal Swing Trader. And I had member Gary V reach out with a question on Facebook on my thoughts on Facebook heading into the end of the year. And first thought, I didn't really have an opinion on Facebook heading into the year, but what we can do is look at Facebook short to intermediate term to see how we could potentially play Facebook in the months ahead. Why do I not have an opinion? Well, we have a lot of uncertainty ahead, in particular the presidential elections before and after, and how that can affect the market, as well as any news around COVID-19, stimulus packages, and all of the other barrage of news that we face on a day-to-day basis. So what we try to do is put our opinions aside, what we think or what we want the market to do. We have to simply look at the charts, approach it from a technical standpoint, and in this case also from a seasonal standpoint. So taking a look at the seasonals for Facebook here, we have a bearish setup coming around the corner right here around October 30th or before Halloween. It's set to last approximately 15 days, we'll call it 2 weeks, and has been profitable 86% of the time over the last 7 years. The average profit in dollars on 100 shares has been about $465. You can see we only had 1 year out of the last 7, which was in 2013, with a modest drawdown of about 3 8/10%. Now if we go to a daily chart of Facebook, you see I've already drawn or analyzed this for our members last week during a member session. Just happened to get this question today asking what I still think about Facebook. So what we typically like to do when we do our analysis is we like to start with the higher time frames, and we want to see what's happened in the past, or basically look left. Well, in a stock like Facebook, we've just recently notched all-time highs. You can see here on this weekly chart we have what we call a double top, or for you candle nuts, that would be considered a potential tweezer top. So we made this high, followed by the next week, couldn't quite take out that week's high, but went right up against it and then closed below that week's open. Now we would typically like to see, for better bearish confirmation, is the body of that candle to be on the, or the close to be on the lower body of the candle, but nonetheless it is a bearish reversal also, and we also have an inside candle, meaning that the high and the low of that week's candle close inside the body of the previous week's high and low. So we don't have anything to look at to the left. So if we come back to the daily chart, what we can do is either time an entry either on the lower time frames, whether that's the daily, possibly the 4-hour, the hourly, or even get more granular on an intraday chart if you want to, depending on your trading style. So what we have here on the daily is a very clear head and shoulders top pattern. We have a left shoulder here, we have a neck, and then we have a right shoulder, and then of course this line here, this horizontal line, represents our neckline. So we have a left shoulder, a neck, a head, a neck, and a right shoulder. In this high probability pattern, this high probability head and shoulders top pattern suggests a move to the downside. So being very loose with the trend lines, we can draw somewhat of a channel here encompassing this recent price action. Notice that once we start to break down, if we start to break down, we'll be cracking this channel trend line and also start testing or attempting to break the neckline. So what we want to do for extra confirmation is wait for a break of that neckline and a possible retest, at least 1 day of retest. More conservative traders may want to wait for 2 or 3 days of retest. How do we measure our risk on the trade, and how do we measure our targets? Well, the head and shoulders top pattern. So for the targets for a head and shoulders top pattern, we measure from the top of the head down to the neckline. So you can see that's approximately $303 down to $247, or about $55 to $56 move, which would take us down here And then we measure that from the neckline, which would take us down here to about 195. So we're looking for a minimum $50 move, and you of course can trail the market even lower by using various trailing stop methods if the market does continue to move lower. How do we play the trade? You can sell out of the money bear call spreads. That is selling a strike and buying a higher strike out of the money and collect a premium. By doing that, we do not have to be overall right on the direction. We can trade lower, we can trade sideways, or even trade to the upside and still be profitable on the trade. Alternatively, if you do not trade credit spreads or have no interest, you can buy put options or put debit spreads, where we're buying a strike here and selling a lower strike here, thus creating the spread, but we are paying out of pocket there. That's why it's called a debit spread. But by doing so, we have to be more right or more accurate on our projected move. We need to see a move down and fairly quickly in order to evade time decay. So I would put Facebook on your radar. So set some price alerts here around the 245 to 250 area for a potential trade to the downside. I would also set price alerts here above the 300 area. If we hit 300 before we hit 245, the head and shoulders top setup is negated. So we cover setups like these all day, every week. If you're interested, reach out to us at support@seasonalswingtrader. Good luck, good trading, and we'll see you on the next update.